Wednesday, November 29th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's getting more and more difficult, I have to say, to understand what's really going on. Markets have been completely distorted by central banks. Old market analysis, which I remember well back in the 90s, doesn't apply anymore. I remember if the stock market was getting too bubbly back then, bond yields would start going up to, basically to cool things down, and vice versa. If stock market dropped a lot, you'd see bond prices recovering and yields going down. But nowadays, we have negative interest rates in most of Europe, up to 5-7 year bonds, government bonds, and stock markets keep going up. I know in the US, interest rates are positive, but still very low. And we have the Dow trading up, to stratospheric levels, and bond yields doing nothing. So it's very difficult, and we have things like Bitcoin and cryptocurrencies, all the rage. I mean, Bitcoin now trading 10,600, and I'm not slagging off Bitcoin. Good for people who have a lot of Bitcoin, but it's not normal that something that was $800 maybe 12 months, 16 months ago is now 10,600. Is that really because Bitcoin is so valuable, or is it more that all the fiat currencies are a joke? And you might ask, why haven't gold and silver gone up then? Well, because they're more under control of the people who control the markets, who have distorted the market. But I would argue that they will in time reflect the complete worthlessness of the fiat money, just like Bitcoin has. Am I saying Bitcoin is not a bubble? I don't know. I mean, I've seen some charts comparing Bitcoin with all the big bubbles of the past, and we are fast approaching the tulip mania. Bitcoin is becoming a bit like the tulip mania in terms of returns. So what I wanted to talk about, though, is more about the UK. There's a lot of, talk about how the best place to be in terms of your investment in the UK is bricks and mortar or housing. And that, to an extent, is true, because the British currency, the pound sterling, has been devalued massively in the last 100 years. There has been controls, exchange controls. There has even been, gold restrictions. It's not only FDR who had restrictions on gold in 1933. In 1966, and I read here from taxfreegold.co.uk, they're a bullion dealer in the UK for coins, bars, everything. And they started out in 1964. And I read from them, it says, before 1966, individual UK residents were free to buy and sell any amount of gold coins. And we were able, that's taxfreegold.co.uk, we were able to make a healthy market in gold sovereigns. But then in 1966, they had the Exchange Control Act from 1966 to 1971. And what was that? It says, April 19th, 1966, the Exchange Control Act came into effect. From this date, it became illegal for UK residents to continue to hold more than 4 gold coins dated before 1817. So 4 gold sovereigns, which was just under an ounce of gold. So you couldn't hold more than 4 of those. And I guess a lot of people hid them. Or to buy any gold coins unless they applied for and were granted a collector's license from the Bank of England. This was implemented by a 1966 amendment to the Exchange Control Act of 1947. Then it goes on to say that this was lifted from 1971 to 73, but then they put VAT on the gold coins in 1973, and it wasn't until January 2000 that UK gold sovereigns became exempt from VAT. Of course, silver coins are still, you still pay VAT. So it's understandable that people in the UK have been, how can I say, more favorable to putting their money into bricks and mortars, because they haven't been allowed, you know, to put their money in gold as an investment. It's only been in the last 17 years that it's been really liberated. So I've done a few bit of analysis. I've looked at the average house price in the UK, Halifax average house price. For example, in 1968, first quarter of 1968, the average UK house price was £3,903, and the ounce of gold was £14.64 pennies or pence. So you needed 266 ounces to buy the average house. And in terms of return, you know, if you look at what the average house price is worth now, and I checked that out, of course, and that is 211,672. And yesterday, I took yesterday's gold fixing at 974 in sterling. So since 1968, if you bought the average house price then, or, you know, a house, if you bought a house that was worth 3,903, today it would be worth 54 times that amount. So you've protected your capital, definitely, by buying a house. But if you had 266 ounces of gold and you hid it really well from the Bank of England and the government, because, you know, remember, you were not supposed to have them. Only 4 you could have. They would be worth now 66 times. So in terms of gold, you know, your money would have done better, you know, 66 times better. House price, average house price is done 54 times better. I know there are places in the UK where houses have gone up even more, so, but I'm just using the average here. But that's why sometimes you hear stories. I think a few years ago, there were removal people in a house, and they lifted the floorboard or something, and they found a box full of gold sovereigns, and people wonder, you know, how come, you know, someone's gonna hide that and leave that there? Well, maybe it was during this period where, you know, for 5 years, you could be in big trouble for having more than 4 gold sovereigns. That's why people hid those. So, yeah, and what are the markets doing this morning? Well, gold is the same old story. It's just being, you know, being kept in this range of 12, let's say 75 to 12.95. We've been up to 12.96. 97 almost this morning. Right now we're at 12.94. Silver yesterday was clobbered. It was back below 17. The pound has rebounded. Apparently there's some kind of deal for Brexit. We're at 134. Cable, I think, as I said earlier, there's very good support around 130.50, 131, and the pound still seems to be on an upward trend against the dollar. That's against the dollar. Against gold, it looks like it's the same thing. We've got like gold is being kept within a range by the central banks and the bullion banks in pounds. I think it's like 960 to 980. So it just goes, you know, it's a totally controlled market for now. When gold and silver will, you know, get rid of their shackles? Well, probably be when people start actually buying physical gold and not, you know, And that's more, I would say, the big investors and big wholesale investors, big funds. You know, if they keep buying ETFs and futures, you know, it won't make any difference. What people need to do is buy physical and put it outside the banking system. What else is going on? The Dow's up 38, no surprise there, 23,860. S&P and NASDAQ. S&P is unchanged. NASDAQ is down 10. I also think that, you know, the move up in the stock market is a reflection of, you know, the currency becoming more and more worthless. I mean, if you lived on the street and there's someone who was printing loads of money, counterfeit money, and going around buying houses and properties and businesses, it would drive everyone out of business, and that's what the central bankers are doing, and the banks who work in cahoots with them, and the governments have, you know, allowed that to happen because it keeps the governments in business. It keeps the big welfare state in business because they can borrow money and keep, you know, the welfare and the warfare state going. It's not only welfare, but all the gravy train bureaucracy of government, that they can keep financing it, even though, you know, you look here in the Economist magazine at the statistics, and for Britain, the budget deficit for 2017 is going to be 3.3%. And our GDP is 1.5. So if you take out, you know, if the government was running a balanced budget, GDP would be negative 1.8%, not 1.5. The US, same story, GDP 2.3, but they're running a 3.5% budget deficit. But Germany, for example, they have a GDP of 2.8. And they've got a surplus of 0.6%. So actually the German economy is doing really well because the government is not interfering and the private sector is creating growth. So that's what's happening. How long this will last, I don't know. Very frustrating because markets can remain manipulated and irrational, I guess, for longer than people expect. So that's it. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet, and you can also follow me on Twitter and on steemit.com. And I'll talk to you later.